acceptance of a presentation from Clifton Larson Allen LLP CLA regarding fiscal year 2021 annual comprehensive financial report known as the ACFR. The sponsors are the budget ad hoc of Supervisors Williams and Supervisor McGorty. Do we have Barrett?
Yes, I'm on the line, and I think Jeff Peak might be here with us as well,
Yep.
Who's the principal on the engagement. Jeff, I don't know if you wanted to take the lead on this. I can get started if you'd like, or if you wanted to just take off.
Hey, thank you very much, Barrett. And yes, my name is Jeff Peak. I'm the principal on the engagement. I'm going to go ahead and I'm going to let Barrett go ahead and do the first introduction in terms of just going through sort of the presentation of the ACFR report specifically. And then the governance communication that's related to that. And then I'll jump back in because I know that there were some specific questions that were posed to us before the meeting. And then I'd like to find out from you all how you would like to approach those questions, whether you'd just like me to cover the information in general, or if you'd like to specifically go through them. And with that, I'll let Barrett go ahead and get started.
Well, we appreciate you having us. As mentioned, my name is Barrett Warnick. I am the manager on the engagement here, working with Jeff Peak, and to present to you the ACFR and our report over the ACFR. So the ACFR is, of course, an acronym for the Annual Comprehensive Financial Report for the county. It's within the report. If you happen to have a copy with you, it's actually on page 29, is a copy of our opinion letter. And so just as kind of an introduction to the opinion letter, as you review that, you'll note that there's a couple of headings to start with. It discusses the report on the financial statements, and then it jumps right into management's responsibility and contrasts that with the auditor's responsibility. And that's a key thing that we always like to discuss. As auditors, we're engaged to perform an audit of the financial statements to determine or to gather evidence to support our opinion as to whether or not the financial statements are presented fairly in accordance with generally accepted accounting principles. Important to understand how that contrasts with management's role. Management ultimately has responsibility for the county's accounting function, and for the processes and controls that are used to keep records and to track items, which eventually all compile to become the financial statements. In addition, management's also responsible for the financial statements themselves. In the ACFR itself, really everything that's there is management's, aside from our opinion letter, which just states, based on our audit procedures, our opinion about whether or not things are stated fairly in accordance with GAAP or generally accepted accounting principles. If we actually skip down to the next page, I think on page 30, you'll see at the top there is the opinion paragraph, and that's kind of the bottom line. Based on our audit this year, our opinion is an unqualified opinion. It's a clean opinion. That's the opinion you want. It's the best opinion you can have. And that's essentially what this letter is stating. It's outlining that there's some emphasis and matter paragraphs here as we discuss. And maybe Jeff will probably touch on this a little bit more, but during the year, there was the implementation of a new accounting standard that we refer to as GASB 84, so Standard 84 regarding fiduciary activities and the way that those are recognized in the financial statements. As part of that implementation of a new standard, there was an adjustment to prior equity, and that's discussed there. In addition, there's some information here regarding the level of assurance that we're providing over required supplementary information and some of the other information that's also included in the county's ACFR. But But the bottom line is that based on our audit procedures for the fiscal year ending June 30, 2021, we are providing a clean opinion, which we refer to as an unqualified opinion over the financial statements in the ACFR. We also like to just touch briefly, Jeff mentioned the governance letter. There's a letter that we also issue that just talks about a handful of things that, and I apologize, I'm not sure if that's in your packet or not, but I can just touch on that briefly. We mentioned, as mentioned, accounting policies that are followed by the county are chosen by county's management and the responsibility of management. In addition, we mentioned that there are certain estimates that go into the preparation of the financial statements, kind of specifically the ones that we emphasize are there's an estimate of the amount of liability for self-insurance that exists. There's an estimate for the liability that exists for the closure of the landfill or related landfill closure, also related to the net pension liability, and sometimes for receivables, an allowance for doubtful accounts. So just so everyone's aware, there are certain estimates that do go into these financial statements. In addition to that, in the governance letter, we mentioned that there are, during the year, there was one adjustment that was considered material that I will probably touch on a little bit more as well, but it's related to some of the COVID funding for FEMA disaster grants. I think that there's an amount that was recorded as a receivable, but hadn't met all the recognition criteria to be recognized at this point. So an adjustment was recorded for that. There are also a handful of items that we refer to as past adjustments or unrecorded adjustments. They're amounts that are considered by management to be immaterial. And so the recording of an adjustment was passed on. It didn't seem like it rose to the level of materiality and was relevant necessarily. That's kind of the high-level overview of our opinion and of the statements that I'd like to present, and then I would turn the time over to Jeff.
Thanks, Barrett. So I'll go ahead and I guess just first jump in and provide a little bit of context in terms of the background of the audit and kind of the procedures that we go through as a part of our audit. So like Barrett mentioned, our audit is really designed to do certain tests over the financial statements so that we can provide our opinion. But what we do is we go through initially a risk assessment process where we take a look at what the various risks are that we see within the county and determine how those different risks affect what we believe the internal control structure should be and what the key controls are surrounding each of those various processes. And we do sort of an overall view of that, not necessarily testing the controls, but we have to gain an understanding and at least walk through to see that those controls exist and that they are in place. As a part of our procedures also, then we design that around those risk areas to whether it's analytical work or detailed testing where we're making selections over particular transaction classes. And then we design that to be able to test those areas and determine if we find any issues or areas where we feel there could be a misstatement in the financials. And that's what Barrick had kind of alluded to in the governance communication, was that there were several things that we found that were misstatements within the financial statements, but only one of those things that we found actually rose to the level of being material to the financial statements as a whole. And so since our whole objective is to design those procedures and to be able to provide an opinion on the financial statements as a whole, we only really recommend the adjustments on things that are significant or material to the financial statements. But ultimately, it's up to management to decide whether they're going to record those or not. So at the end of the day, what does that all mean? It means that when we provide an opinion on your financial statements, that you can utilize that information there and feel confident that you can make proper management decisions by utilizing those financial statements. And that's really what it means. It doesn't necessarily mean that there's no errors at all within them. It just means you can rely on the presentation of the financial statements to be able to properly make management decisions for the county. I'm going to go ahead and shift gears then real quick and ask the question, because I do know that there was a list of things that was provided to us as part of this discussion. And I would love to sort of understand how the group would like to proceed with us kind of going through those various questions and providing some feedback and some potential answers to those.
I think the ad hoc would like to guide you through some questions, which I understand you've already seen. And I imagine my colleagues will want to interject with questions of their own. But the ad hoc had some opportunity to review and ask questions of staff, and that drove this list, if that's all right with you.
That's perfect.
Feel free to give us fill-in-the-blank answers. We don't need an essay. You have as much time as you need, but don't feel the pressure to be exhaustive. We mostly want to make sure our entire board has a sense of the ACFR, the outside auditor's role, the process, what's unfolded in timelines. So to start, can you tell us whether the ACFR is compiled by county staff or CLA?
So we're provided the information directly from the MUNIS system, which is the county system. And we receive those trial balances, and then we actually group those into groupings for financial statement presentation to import into our accounting system. But the short answer is that information that's within our system then ends up being what drives the presentation in the financial statements that we assist in preparation for. However, the county does take responsibility for those financial statements and the presentation of them.
And when you say the county, is that the auditor's office?
So we engage very closely with the auditor's office, yes. And so generally speaking, yes, when I'm referring to the county, it's generally the auditor controller's office.
In recent months, the board has struggled to figure out how to get regular financial reporting. And one of the problems we've faced is our executive office says not everything is in MUNIS. And we've asked various ways, where is the remainder of the information? Did your team work with what's in MUNIS, or were there outside documents, for example, Excel spreadsheets that were part of your process?
So I think that this is getting into the idea of, how the MUNIS system is sort of maintained, and then what needs to come in from a full GAAP accrual basis of accounting into the financial statements for the final financial statement presentation. And so I would say that all of the information ultimately is contained within MUNIS. But a lot of times the things that, might cause differences between what you might see in MUNIS and what shows up in the financial statements is really just a timing difference related to when those items are recorded into the MUNIS system, but when they're required to be reported from a financial reporting standpoint under generally accepted accounting principles. And so there are certain accrual schedules that are provided as part of the audit, such as accounts receivable, where a lot of that information is being captured by the various departments, and the departments are the ones who are providing this information to the auditor controller's office. The auditor controller's office identifies those items that they say, really, we earned these revenues within the fiscal year. For example, fiscal year 21. And so even though we didn't receive that funding until, let's say, July, August, September, we still need to record the receivable and the revenue into our financial statements as of June 30th. And so based upon those schedules that are prepared, by information that is still flowing through Munis, then there's those accrual entries where you're recording the receivable and the revenue, and sometimes a receivable and an unavailable revenue under governmental accounting that you would actually see in the financial statements. And as a result of this, there can be differences from a timing standpoint that you would see between what's in Munis and what shows up on the financial statements. But generally speaking, all of the information is actually flowing through Munis.
So to give you an example, we recently learned that as of June 30th, 2021, disaster recovery had a deficit of 11.3 million and the health insurance 3.6 million. If we were to run regular financial reports from Munis, would we have been able to see that sooner?
I'm not sure that I know the precise answer to that question. I can tell you what led to the disaster recovery fund, ending with a negative fund balance. And let's start there, and then maybe we can have a discussion about sort of what that looks like in the Munis system. But with a lot of the federal funding that occurred over the last 2 years, there's been some confusion about how that should be recorded and when it's recorded, and is it really a receivable now, or is it do we not have a grant in place yet? And for part of what happened on the disaster recovery fund, there was 4.2 million approximately that was through the FEMA grant that was for Great Plates. And the way that we're required to look at do you have revenue or not in this particular instance has to do with whether there was really truly a grant in place. And in a lot of other cases with FEMA and with all the disasters, typically they step in with the fires and things like that have been occurring. And FEMA and the state and the county would work together to put a project worksheet in place, and they would have an approved project worksheet which would essentially be sort of the start of the grant process. Well, typically under that scenario, that approved project worksheet would be the initial date that then you would start accruing all revenues related to any expenses incurred that would be eligible to be reimbursed under that grant. Well, with the Great Plates program, while FEMA opened that program up, you didn't actually have a grant because there wasn't a project worksheet approved yet. So the only thing that triggered an actual grant being in place was the obligation of that grant funding by FEMA. Well, FEMA sort of dragged their feet quite a bit. And so a lot of times you would have these expenditures that were eligible to be reimbursed, but FEMA might not approve those eligible expenditures for a year, even longer than a year. And I think some of those things might even still be unapproved by FEMA. And as a result, because there wasn't an actual obligation or grant funding in place, you can't record the accrual of the revenue. So you have no accounts receivable, and you also have no revenue associated with that. However, you've incurred all of the expense associated with that funding and that particular grant program, which is what caused it to go negative in that particular instance. Later on, you'll end up with the revenue once FEMA actually gets around to approving the obligations. Then you can record that revenue and the receivable within the financials. But until that grant is approved, you can't under generally accepted accounting principles. The other thing that impacted this, and this is something that's directly in the financial statements, is this idea under governmental accounting of availability of funding. And there was about $8 million that was not received within the availability period. And you can actually go into the footnotes in the financial statements, and it will describe specifically what the availability period is for County of Mendocino. And that availability period is 60 days. And so you might have actually earned the revenue under a grant program, but if you don't receive that funding within 60 days of year end, it has to be categorized as unavailable revenue. And so it moves back up onto the balance sheet as unavailable revenue. And that caused the additional $8 million to be moved out of revenue and placed on the balance sheet as unavailable revenue. But you still have all of the expenditures associated with these, which in totality resulted in an $11 million deficit. So it looks a particular way because of the accounting treatments that had to be applied to it. And the reason why I say you may or may not have been able to identify that was because at the time, individuals had interpreted that those were going to be receivable within the fund accounting. And so the receivable and the revenue originally was recorded into Munis, and that was reversed out for financial statement presentation purposes. Would you have known this doing this on a month in, month out basis? It's hard to say because the financial statements are always presented as a snapshot in time. They're presented as of June 30th each year. And so a lot of the determinations on whether things are allowed to be recorded or not recorded, you can't make those decisions on a month in, month out basis. Those are things that you really determine based upon that time period, that closing period after year end, when you're gathering all the rest of the information to ensure that you're reporting these things properly within the financial statements. So you could, in theory, be conducting, accrual accounting 100% throughout the year, but it would be a huge challenge because the amount of resources it would take, specifically at the department level, to be able to provide the information necessary so that those entries could be recorded every single month, I think would outweigh the benefits that you might obtain by having that done on a month in, month out basis. What I would say is that likely the information in the system is closer to sort of what I would call like a budgetary basis of accounting, where the expenditures and things that are flowing through the Munis system on a month in, month out basis, and the revenues that are being recorded in, can be used to understand sort of how closely you're tracking to those budgets. But then you end up with accrual accounting coming in at the end of the year, or maybe quarterly or something like that, to give you sort of a more full picture of where all of the accounting is in accordance with generally accepted accounting principles. But at the end of the day, it's an accounting treatment for financial statement presentation. It doesn't mean that you can't rely on the information that's coming out of the system. It just might look a little bit different depending on the time period of the year that you take a look at it.
Supervisor McGordy?
So is there a way of reporting funding trends so that you at least know that while you have a deficit at the moment, that there will be payments, so that we have a way of assuring ourselves that we're not going to deficit spending?
I'm not sure if I can answer this from like an operational perspective.
Maybe we'll come back to it. Can you tell us why the ACFR for 2021 was delayed? Were the delays due to any county processes? Is there any process we could improve to avoid delay in the next year?
So there were several different things that led into the delays that occurred in regards to the ACFR this year. The first delay, the first thing that started to cause the delay was we found out just before our audit fieldwork was set to begin that the prior auditor controller was retiring. And as a result of that, some of that long-term institutional knowledge that would have been available during the audit process was going to be lost sort of right at the beginning of when we were going to be starting those procedures. And then additionally, in the fiscal year 21, the GASB 84, which is the fiduciary standard that Barrett spoke about briefly, was also being implemented. And this ended up being something that the county wasn't fully prepared for and had not prepared an analysis of those fiduciary funds, which ended up taking a significant amount of time and resources to gather the information related to the implementation of GASB 84. And as a result, it was identified that there were going to be some delays in being able to complete out the audit procedures at the time frame we had originally agreed upon. As a result from that, we initially just delayed out performing our procedures because we do have a schedule and we kind of have to make sure that we're fitting all of our clients into that schedule. And due to the initial delays, we knew we wouldn't be able to complete that out until a time period that was quite a bit later down the road. There were additional factors that also led into this as well in relation to the single audit side of this, because OMB, which is the Office of Management and Budget, releases a compliance supplement each year that tells the auditors specifically what the compliance requirements are and what the suggested audit procedures are that they're supposed to conduct in relation to the major federal programs as determined under the single audit. And OMB did not release their final compliance supplement until January of 2022, which significantly delayed all of the single audits for the prior year. And as a result, OMB actually extended the deadline for the issuance or the final issuance of your single audit until September 30th of 2022. And I will mention at this time that we are in the final phases of that, and we still expect to issue and have that filed before September 30th, which would technically be an on-time filing in accordance with the extensions that OMB provided.
Supervisor Haschek.
Yeah, just listening to NPR this morning, they were talking about the FEMA reimbursement for the Hurricane Maria in Puerto Rico, and then the funds still not coming after 5 years. And so, we're looking at this $11 million for the disaster recovery fund, and we've spent that money. So is there any idea about when FEMA will be getting us that money? And I guess the implications for, what is the implication for the county budget in the meantime?
CEO Antle.
Acting Deputy CEO Sarah Pierce, I believe some of that money has came in since then, since this was reported out. So Sarah can give us the most current update.
Good morning, Board of Supervisors, CEO Antle, Sarah Pierce, Acting Deputy CEO. So yeah, we the 4.6 million that Jeff was referring to earlier, actually we received the obligation letter in July of this year. So we will be recording that as revenue in fiscal year 22-23. And just recently, within the last month, FEMA has changed how they are categorizing projects. Prior, anything under 130,000, I believe it was considered a small project. They've now revised the small project threshold to $1 million. So a majority of our projects are now considered small projects, and they have just in the last month begin obligating our projects. So I believe that we will start to see obligation letters and payments at a more timely basis.
Okay.
If I may, Sarah, would you please pull up the slides that you had for disaster recovery in the health plan so this board can understand what we're seeing in Munis versus what we're seeing in the audit that has caused serious concerns. So we have disaster recovery as an example and the health plan.
So yeah, so when I ran the disaster recovery fund balance as of yesterday, or actually it was the 16th, we still show for fiscal year 2021 a positive balance of 1.5 million. Whereas, as Jeff had explained earlier, it's truly at an $11.38 million deficit for fiscal year 2021. So my concern as a department head, especially responsible for this fund balance, is that we're showing revenue in fiscal year 2021 in Munis, but it actually will not be recorded as revenue in Munis until fiscal year 2023, unless these adjustments are entered. So it makes it difficult to provide accurate data and budgeting when for 3 years straight, the information will be different than what the ACFR states for both these adjustments. And then relating to the health plan fund balance, this is a little bit different, but same kind of scenario. If we look at the 2021 cash balance for the health plan, we see $797,000 deficit, but on the ACFR, it was reported as a $3.6 million deficit. And while the executive office staff has had an understanding that this cash balance did not include the incurred but not reported IBNR expense, the staff was not aware that there was no other reserve to cover this IBNR because historically, executive office staff visibility on balance sheet accounts has been limited, and balance sheet accounts were provided by the previous auditor. So for both of these scenarios, while I completely understand the reasoning behind the adjustments, especially for disaster recovery, without having the appropriate adjustments made in the county's financial system, it is hard for me as a department head to know how to budget and how to accurately explain the budget to actual variances, which arise from the adjustments not being made. Additionally, having the adjustments only tracked in an offline Excel document is troublesome, especially if any parties who are currently involved in the inner workings of these accounts leaves the county. So if you have any questions, please let me know.
I have a question. How do we get Munis annotated with all of those details so that when a report is run, it's clear to somebody who doesn't have the institutional knowledge where we stand? And I'm less concerned about the disaster recovery funds from FEMA. That looks like a framing problem, that the way we're booking it in 1 year and the rest of it in another, hopefully it balances out, and in the end there's zero in that column. More concerned about the health insurance because there isn't another entity that will balance that out in a future year. And if we run reports and we don't see the health insurance accurately reflected, we're likely to make decisions with bad data.
So Sarah Pierce, Acting Deputy CEO. I will defer to CEO Antle for further explanation, or the Auditor Controller if she is online. But it's my understanding that the Munis system has the availability to book adjustments in what's considered period 13. So you could run a year-to-date report through the end of June and come up with what has been truly booked. And then any adjustments that are proposed by the auditors and accepted could be posted in period 13. So then when you run it through 13, you get what would potentially match the ACFR.
Supervisor Jurdy.
Yeah, that's a question, Sarah, to kind of clarify that. So you said period 13, so that sounds like something other than one of the 12 months. So are you saying, so if there's a known expense, but it just hasn't shown up yet as an incurred expense, it would be put in that 13th column?
That is my understanding how Munis works, but I would defer to either IT or Auditor Controller or CEO Antle if there's further information, but there is an extra period that we could be used for closing.
Does CLA have a recommendation based on practices in other successful counties? How should we be keeping our records?
So, I mean, I think the use of a 13th period is a great idea. it's definitely something that I think a lot of entities use and can be very successful using that, because then you can maintain your 12 months in accordance with sort of how you're operating, and then using that 13th period to capture those accrual entries that I referred to, so that things then reconcile out to the financial statements themselves as a result of the entries being included there. This is definitely a decision that management of the county has to make on what you'd like to see and sort of then what steps you want to take, because you can definitely operate and just have your books through 12 periods from an operational standpoint and record those accrual entries in each year. But I understand why then that creates a little bit of a disconnect with the financial statements themselves. Keep in mind, that it would only be that one time of year where you're running the full year plus the 13th period that then things would tie into the financials. The other thing that I would mention too is that there is a lot of combining that goes into the financial statements themselves. So let's just say you have 10 different funds, but those 10 different funds really combine into one fund for financial statement presentation. It's important to kind of understand that connection. Otherwise, you wouldn't really be able to trace back one single fund into the financials without knowing how it combines with others.
One of the challenges the board faces today is negotiations. And I would characterize this board as pro-labor. And the difficulty I think we're running into is not, do we want to provide a COLA, because it's just a fact with inflation at current rates, not providing a COLA is a decrease in pay for everyone. The challenge is figuring out how much additional revenue do we have on the table that's not already allocated. How do you suggest we use the ACFR as a tool to determine what we could afford additionally for labor in the year ahead?
I honestly don't think I'm prepared to answer that question.
Where would you reckon? I understand this is a bit outside the bounds of what CLA is providing to us. You're providing an opinion and an audit, but you also have a lot of domain experience. You work with other counties. Do you have any recommendations on how we answer the question? As far as methodology or other entities that may be able to help us, I don't mind being the supervisor to raise my hand and say, I don't know. When I look at revenue, it looks fairly flat, but in past years, projections have been off, and the auditor would find millions of dollars at the end of the year. This board doesn't want to be in a position where we don't provide for our employees, and then we find that we had the money and we should have done it. We will lose people in that process. We also don't want to overspend, overcommit the county, and be in a position where we have to cut back.
I mean, this is kind of a complex question that I feel like I would need more time, and I'm not really prepared to answer that on this call.
That's a fair answer. If you're willing to consider it later, I'd like to see if there's direction from the board to utilize your services to help us get to the bottom of this. Supervisor Haschek.
Well, it seems like with these experts on the line, and we should also have the treasurer, tax collector, auditor, controller on the line in this discussion, because we're dealing with the implementation of some of these strategies and how to go about it.
Yep, by all means. She's invited. In fact, we thought she would be writing the agenda summary, and the ad hoc filled in the absence of one being provided. So if the auditor, controller, or tax collector would like to join us, by all means.
She actually did join the call within the last few minutes.
Okay. Another question we had was, you mentioned internal control structures. Can you talk about the internal control structures for payroll? The ad hoc, and I think the board as a whole, has been concerned about weak links where one or two people control a process that would be difficult to replicate. If they were to retire or move on to other positions. Do we have adequate resiliency and redundancy in payroll? Is that something that you audit?
So I mean that redundancy and that's not something that would really be within the scope of what we do as part of the audit.
Can you talk about how payments are issued? Does that all run through the auditor's office? For example, can the executive office issue a check?
Off the top of my head, I don't know the answer to that question.
Okay.
Without going back into my work papers to review the information.
What is typical for a county for payroll? Are those checks in that process typically under the auditor?
I believe yes, at least in terms of the payroll department itself is usually somehow supervised by the auditor controller, but occasionally it's not. It just depends on how operationally it's set up at the county, so it can vary.
And as part of the outside audit, did CLA review and audit payroll?
So we performed audit procedures over payroll to allow us to provide our opinion on the financial statements. But that the level that we did that to was really just to that end, specifically with the understanding of the internal controls to allow us to be able to audit those in a way to provide our opinion. But that doesn't mean that we necessarily dove all the way into all of the details.
Understood. Did you spot check? Do you check a random sampling of paychecks to make sure they're as expected?
So there is sampling that occurs through our audit, and the sampling that we conducted as a part of our audit procedures did not detect anything that would have caused a material misstatement to occur in the financials.
Supervisor Jurdy.
Okay, thank you. All 5 supervisors, we serve on other boards of directors for other organizations, and of course they're smaller than the county. And on at least 2 of those boards that I serve on, I've been asked in different years by the outside auditors kind of questions along the lines of, are you aware of anything that you think could be cause for concern for fraud or use of funds? I've never been interviewed as a supervisor by any of the outside auditors of the county. Not that I would necessarily have that kind of level of operational information because the county is so large, but I'm just curious, in your contract, is that a kind of a question that you do ask those that you randomly interview for your audit?
Yes, it is, and we're required to do those procedures on an annual basis. Who we choose to speak with is kind of up to what we decide to do on an annual basis, but we do always speak with individuals from governance. We speak with individuals from management, and we also speak with individuals that are just employees within the county. So we talk to individuals and are required to under the auditing standards across various levels across the county. How many and who we speak to is, it varies depending on the audit that we're conducting, but we do talk to those individuals and ask questions about possibilities for fraud, as well as concerns that individuals might have on areas of weakness. And we take that into consideration in our risk assessments.
Approximately how many did you speak to this cycle?
Approximately, I would say 7 or 8 individuals.
Okay. And then back to payroll for a moment. I receive a paycheck from the county. Who audits to make sure the amount I receive is correct?
I'm not sure I understand the question.
Well, I receive a paycheck every couple of weeks from the county of Mendocino. I work here. Whose responsibility is it to audit the amount to make sure that it's correct. Does the outside auditor get into that, or is that our county auditor controller? Who is the final authority and responsibility to ensure my paycheck is correct?
Chair Williams,
Yep.
This is Shamiz Cubison, Auditor, Controller, Treasurer, Tax Collector. It's the payroll manager or the payroll department in the Auditor Controller's office. We did not engage CLA services for a payroll specific audit. So payroll is touched for the various different pieces of the other audits they perform, but we did not engage them for a payroll specific audit.
Understood.
In regard,
Is that a practice that we should engage?
quite likely.
And are you the final authority and responsible party for payroll checks issued to all employees?
I suppose, being that payroll is under me at this time, we're trying to transition it.
But even when it's transitioned, say the executive office assists with entering the data, are you still the responsible party for verifying to your satisfaction that the amounts on all checks are correct?
You know, I'm not sure if this is the time we're trying to deal with the ACFR presentation. If you want to have an in-depth conversation, I have spoke to other counties. There are, I believe, 4 other counties that have payroll outside of the auditor's office. And I actually did contact Yolo County. That seems to be a county that Mendocino seems to be following lately. And they did indicate it's not in the auditor's office, nor do they audit it. On a daily, weekly, payroll by payroll basis. It's audited, I believe, internally every 2 to 3 years, but they do produce the checks in the auditor, controller, treasurer, director of finance office. But that is responsibility of human resources, who produces payroll in Yolo County. So I think it really depends on which county it's in. But it is my understanding that those other counties where payroll is not located in the auditor's office, that the auditor's office is not auditing that payroll on a pay period or even quarterly basis. It is the responsibility of that other department. And that's, I believe, the same with Butte County, where payroll is located in human resources as well.
County Council, what is your understanding? Who is ultimately responsible for verifying payroll?
Per state statute, the check has to be issued by the auditor. So the auditor is ultimately the one that gives the final authorization. You can have essentially a structure where payroll is performed in another department, the numbers are compiled and ready, and then the auditor decides essentially if they're satisfied with that and what level of review.
Right.
Whether that's a few years, whether that's every single paycheck, that's ultimately going to be the auditor's discretion.
The reason I bring up this overarching topic is the biggest expense our county has is labor, right? Primarily that's how we spend our money. And we want to make sure we're auditing the largest category. And I'm hearing CLA say it's not part of their audit work with us. And I hear our audit controller saying their office hasn't done the auditing. So is it fair to conclude we haven't audited payroll, the largest expense to our county?
We have not engaged an outside audit firm to do an annual or other timed payroll specific audit. And that's certainly something that the county can, contract with.
What about internally, without the outside auditor, do we engage in auditing payroll?
Well, yes, we review payroll. We review the time records. We also review the personnel actions that are entered by human resources.
So how do we get from we internally audit payroll and time reporting to an outside audit that doesn't verify our largest budget category, labor?
Well, it's not conducted as a payroll specific audit. We did not contract them to audit the entire payroll process.
Yeah, I'd like to clarify that we do perform audit procedures over payroll, but we're not saying that every single paycheck is accurate. We're auditing payroll to be able to provide an opinion over the financial statements as a whole. So payroll is included in our audit procedures for us to be able to provide an opinion on the financial statements.
Okay, and then last question. We'll see if my colleagues can think up some more. It's my understanding the health plan is a 25-75 split between employees and the county. Did you audit whether we're following that formula? The reason I ask is I think the previous auditor was involved in what some have called a holiday from contributions to the health plan, but it doesn't look like it was a holiday for both the employees and the county, meaning that 25% wouldn't have been respected. And I wonder, does that lead to the situation we see now where we show a multi-million-dollar deficit in the health plan? And if we try to realign, it creates a hardship for employees because it appears to be a substantial increase when in fact it's only getting back to the approved split between county and employees.
Oh, Chair Williams, if I may respond, it's my understanding from the previous auditor that the health plan holidays occurred because the state was not comfortable with the amount of funding that was being held in the health trust. And at the time, our experience was that we didn't have the high claim volumes that we have now. And we actually had built up a significant amount of money in the health plan. And so the state was not comfortable with the amount of money that we were continuing to charge. That's my understanding. And so the health plan holidays, I think there were two, I'm not sure if there were 2 or 3 of them, were in order to draw that balance down because at the time, the claim experience that we had was not what it is now. We did not have the significant number of claims that we've had over the last several years. So that's my understanding for the health plan holidays.
That makes sense. The part where I'm stuck is, why wouldn't the holiday be for both the employee and the employer? How do you maintain this 25-75 split if the holiday is only applied to the employee?
Sure why it was only applied to the employee at the time.
Wasn't that decision made by the auditor's office? Is there documentation? And is this something that we've audited?
It was not I was not involved in that decision at the time.
CEO Antle, is your office involved in that decision?
Not at the time, no.
Where do we find, CEO Antle, where do we find the documentation to understand how the county envisioned maintaining the 25-75 split while giving a holiday to only one side of the transaction?
We can definitely look through some documentation, but I would believe that would be part of the institutional knowledge that may have been lost over the last years. If I remember correctly, the health holiday was 16, 17, 17, 18, something like that, prior to my term here.
So for CLA, did that holiday lead to the deficit we're seeing in our health plan today?
I do not have an answer for that.
And where do you see our health plan trending if we continue the current contribution rates?
So I was not prepared to talk specifically about your health plan today. So I honestly do not have the information ready to give you an honest answer.
Any other questions from the board? Supervisor Haschak.
Well, one of the issues we're dealing with is this communication of the health plan deficit. And so, and the information we're getting and whether it's timely or not. So I'm just trying to figure out, where do we go from here? How do we get that timely information if what we're seeing in Munis is only $750,000 deficit, and yet the reality is it's several million? So how do we get that information?
Auditor.
Chair Williams. So, I'm not sure exactly, I don't really want to, it's unfortunate that the board was not brought up to speed sooner on this, but Auditor Controller Weir and I met with the CEO's office about the health plan more than a year ago and about the deficit. And at the time, the CEO's office was able to print the report out of Munis, and we did go over how to read it. We did discuss that it was looking like it was at a $3 million deficit. And I believed, because there was a presentation to the board less than a month later by the CEO's office, that that deficit would be discussed. And I believed at the time that the CEO's office would ask for an increase in the health plan rates at that time due to the deficit. And that deficit was known back in August of last year. So I'm not quite sure why the information did not come forward, why the consultants did not bring that information forward. But, you know, the payments that go out to the various providers are authorized by the CEO's office. So I'm not quite sure the health plan is managed by the CEO's office. Those payments going out, the claim history, the experience, all of that information is managed by benefits. So I would, you know, have imagined that the health plan consultant, if they were appropriately looking at the experience, would be working to bring that information forward. It's unfortunate that it did not, but I'm sorry that responsibility has laid with the executive office. And Auditor Controller retired Lloyd Weir and I met with them before he left the county to ensure that they knew how to read the reports and that they were clear that they would be the ones monitoring that account when he retired. So I don't really know why that information did not come forward. I think it was in September of last year that presentation, either September or October, came to the board. And I unfortunately was not present or able to even watch that presentation, but I was surprised that it did not appear as a significant increase as I would have thought would have been requested, was not requested at the time. So, you know, it is important to be able to read the reports, but the information is available. And, you know, the statement that information wasn't available to that staff is incorrect, because the reports that were produced at the time were actually produced by the staff in the CEO's office for that meeting. So they've had the access. Maybe they did not understand how to read the report, but the information was available.
CEO Antle.
Yes, I remember that meeting, as well as does Deputy CEO Sherry Johnson. And it was reported to this board twice in public session last year that the estimated loss on the health plan was $1.1 million. And yes, we did ask for a 4% increase up to, and I think we were approved at a 12% increase moving forward. So there was recommendations to increase the health plan. The report that Ms. Cubison is speaking about is not a report that our office ran, and Sherry can confirm that. It was a report brought over by them, and again, it wasn't something that we routinely have access to, and if that is the case, Ms. Cubison, we certainly all need some additional training on how to follow through that system and find what you're finding, where that 2.5 million is. Prior discussion here, acting Deputy CEO Sarah Pierce pulled up a report that shows today balance of a negative 7.7 million. $797,000, not million. And we learned that as a 3.6 through getting the act for finaled. So there is something missing here. I'm not quite sure where it is. But I'll turn it back to the board unless there's further questions, or if Sherry would like to speak.
Supervisor Jordy.
So I don't want to derail this conversation if there's something more to be said, but I had an unrelated question to the auditors.
Sherry, Deputy CEO Sherry Johnson.
Good morning, Chair, members of the board, Deputy CEO Sherry Johnson. So I'm just concurring with CEO Antle, the information that she has received. So the information that we did receive in August of 21 was that we had a deficit of about approximately $1.1 million. And so we did meet with Shamise and retired auditor Lloyd Weir. So we, at one time, we did have the deficit of, $2.5 million in the IMBR. So that's the trail that we were unable to find by running a report, is when we did have the deficit of $3.6 million and then being reported to our actuarial as a deficit of $1.1 million. So when we run reports, we did not see the tray where the $2.5 million was taken from the INBR to offset the deficit of the $3.6 million. So that's what we're asking for, is the reports to be able to track where the information, how we can basically follow the trail in simplistic terms.
Who do you believe is responsible for generating those reports?
Well, I believe that that I would be responsible. I believe that I was running the accurate reports that I had access to.
And now you understand that those reports were not accurate,
Yeah.
at least the way you were interpreting.
Exactly, yeah.
So has that problem been resolved? I think what the board is after, we want to hear staff is able to accurately determine the deficit in our health plan. And every number I see is different. Can we at least agree today what the deficit is?
Darcy Antle,
Yeah.
CEO, perhaps Auditor Controller Shamise Cubison can pull up that report and show us. You saw prior in this conversation the one that we were accessing that Sarah Pierce shared.
Auditor Controller, is that something you're able to do?
I'm not prepared to do it right this moment. I was not presented with any talking points for this discussion today. So.
I understand, and we're not going to put you on the spot if the timing is bad. Could you get back to us with that total? The deficit of the health plan to date?
I'm sure I could get back to you at some point. Yes.
Or if you think another department can do it, that's fine. But which department? How would they run the reports? What I hear is our executive office finance team doesn't have the knowledge or ability to run the report to determine the deficit.
We'll have to look at their Munis access permissions, but I'm confident that they have it.
So that we have a number as a baseline that we know we can trust. Could you bring it back to the board next meeting?
I can't promise that.
Is it difficult to determine the deficit?
I can't promise I can be present at the next board meeting.
Could you submit it for the meeting even if you're not available?
I will do my best.
So Auditor Controller and CEO Antle and County Counsel, an outside auditor, why is it difficult for this board to determine the deficit in our health plan? Why is it a multi-month, we'll do it if we, best good faith if we can? Why isn't it a push of a keystroke? Shouldn't it be in the accounting software today?
It's in the accounting software, but the fiscal year is not closed as of right now, so I don't know whether those numbers would change or not at this point in time.
Could we get the number as we know it with an asterisk that it's subject to change if more transactions post before the close?
Yes.
So that's something we could run. How long would that take? Today? Before next meeting? What's reasonable? We're making, and I don't mean to be frustrated with staff. I think you all are in a difficult position. We don't have a great process here. There's no blame, but we're making decisions about COLAs, and a multi-million-dollar expense. 1 million versus 7 million is really material for our budgeting process. And meeting after meeting, we can't seem to get to the bottom of our expenses. I don't know. I see 3.6 on a report Sarah ran. I don't know if that's close, rounded to the nearest million, is that right? Or could it be double? Supervisor Haschek.
Well, what I would like to see out of this is that here we have the executive office saying they don't have the right information for the INBR. And so this 2.5 million wasn't available to them. We have the auditor saying that, these reports are hard to generate. We have a consultant for our healthcare who, I don't know what role they're playing in it, but we've got all these different parties where we're not communicating. And I think that I would like to see that there's a agreement coming out of this, that we have some way of making sure that everyone's on the right page and the same page, and that, it can't be that difficult to say, okay, we're going to share this information with you, we need this information, and let's move forward, because otherwise we're just in the dark.
CEO Antle?
If Ms. Covison can tell us which report to run that would accurately reflect it, I'm sure Acting Deputy CEO Sarah Pierce could run that. I just don't know which report she's referencing for the health plan balance. And yeah, I mean, I feel like I work very well with the health plan. We've worked well with Shamice. It's just there's been this gap on this 2.5 and really getting it clear through the ACFR that it was utilized at the close of last year. And that was the information we were missing because ACFR came out on July 14th of this year. They usually come out in the fall.
Do Munis reports have descriptors of some sorts, a name or an ID? What exactly are you looking for?
Was it actual to budget? What report would we be looking for?
Auditor, Controller, are you able to, or is somebody in your office able today during our meeting, we can pause at any time, tell us which report the executive office should run? We can't have this go on another month.
Chair Williams, I believe they need to look at the year-to-date budget report throughout the year, and they need to look at the balance sheet. And I'm not able to produce the balance sheet at this moment because I'm not sure if the IBNR adjustments have been made for the end of the 21-22 fiscal year. So I'm not sure if I produced a report right now today, if it would actually be accurate. So I'm not comfortable just producing a report and sharing it on the screen without knowing whether the IBNR adjustments for the end of 21-22 have been booked yet.
Can you describe those adjustments and where those live? Earlier, we heard from our outside auditor that all of the data should be in Munis. So I wouldn't think we would need to manually adjust. Isn't it all there?
It comes from the health plan consultant at the end of the fiscal year based on the experience factor and what they project. So it's something that is an adjustment that is made in Munis, but it is based on information that the health plan consultant provides.
Supervisor Jurdy.
Yeah, I think this is unrelated. On a previous board, actually City of Fort Bragg, back in the mid-1990s, the city council had voted to, approve various projects, maybe a traffic light, things that were capital projects in many cases that carried over beyond a fiscal year. And then later, for cash purposes, the money was spent on other things, and although the budget showed a balanced budget, the audit, I think it was for 1997-98, showed a fund deficit of several weeks worth of operating expenses. So there was actually a deficit discovered in the audit. As I read it, your audit shows that the county's fund balance is actually improved. But would the audit you're conducting, would it have caught something like that, say capital projects that may carry over from more than one fiscal year that were intended for that project and really obligated, encumbered maybe for those projects? Would your audit have found that those funds were indeed encumbered and therefore not available for other purposes?
It depends. It depends on what it is, what the amounts are. So I can't really say whether it would have or wouldn't have, depending on what it was.
For the close on June 30, 2021, we see $3.6 million deficit for health insurance. Is that number deemed accurate? Can we trust that?
So that is deemed to be a reasonable presentation of the financial statements as a whole. The information, as Shamice indicated, comes from the third-party health advisor that comes up with the estimates on what those amounts are that are for the IBNR. And so based upon the information that's available at that time, that is considered to be a reasonable estimate of what the liability is.
So
but
that
those estimates could change.
I understand, but this was 15 months ago. Wouldn't we know by now?
We would get a new IBNR
Have we
for
received one?
this. I believe so.
And do you know if the amount is significantly different than the 3.6 million?
I don't recall what the difference is between the amount they gave us at that time and the amount they gave us at this time. It's an adjusting number.
So I want to go to county council because I guess I'm frustrated that I'm asked to make decisions here, financial decisions that affect our employees. I don't have enough data to work with. We can't agree on numbers. We can't even agree if we can agree on numbers. There's now this meta problem. Nothing really adds up. And I don't know that it's anybody's fault. I don't think we have great record keeping and a great process in place to report in a meaningful way that allows policymakers to make decisions. What do we do? It's becoming a legal question.
So it's maybe a little bit broader than just a legal question. I think, I mean, you are correct that you do need information to be able to make decisions. I don't know that I can tell you what, in terms of the software side, in terms of the logistics, what are the best and most efficient steps. I frankly might need to defer to the people with more subject matter expertise.
Does the board have the ability to hire a consultant to look through the data and give us an accurate report?
You definitely have the ability to hire a consultant. What I don't know is if the consultant would be able to generate an accurate report based on the things that are being said. That's a little beyond my expertise.
Is that because we may not have the data or because the consultant may not be able to access it?
I think I'm hearing concerns on both fronts.
So the access front, the board should have the ability to get at the data, correct?
Yes. I think what I'm hearing, though, is that some of the information this may be a little bit of a semantic distinction, but maybe either in the hands of consultants or otherwise not readily available.
So back to the board, I'm at the point where we're delayed, we're so far into negotiations, we can't tell what's what. I think we need to hire a consultant and have the consultant procure the data and generate reports so that we can make better decisions. Supervisor McGordy?
I'm still trying to follow our health plan, how it actually works. So, you know, in most organizations, there would be an expenditure and a reimbursement, and that should be pretty straightforward. So what's going on? So that's not something that's internal, that goes out to a consultant who manages our health plan, and then we're not getting regular reports from them, and they have to kind of true up at the end of the year, or how does that work?
Darcy Antle, CEO. Sherry, you can approach if you want to add. My understanding is the information that was provided out of Munis was always provided by prior auditor controller Lloyd Ware to the actuary. The team, the in-house team, tries to monitor claims against revenues as they come in and go out. But again, that is done on an individual basis in an Excel spreadsheet. So that's not, in my mind, the most efficient and accurate way to do something if someone's off, or again, we lose historical knowledge. But that's my understanding of how it's monitored right now. The actuary did run a IMBR, and he's recommending 2.1, 2.5 for this year. So that is an addition of funds that we would need to set aside.
So the actuary is making some of these decisions then, is that correct? So they're following the trends of expenditures, and then they're saying you should plan on funding this plan for
yes,
additional $2.5 million just based on the trend of expenditures?
Yes, and that's currently because you're a self-funded account, right?
So
and we've had high claims and high acuity over this last 2 years. That kind of have ran it into a deficit. And prior years, to Chair Williams' point, there was not increases provided throughout the year. There was a need for a premium increase, but it wasn't the prior boards direction to raise the rates at the time. So there were several years where the rates never increased for the employees, but they increased for the county because of the utilization and the high acuity. So that's how you've got out of swing, the 25 to 75. Sherry?
Deputy CEO Sherry Johnson. So that's accurate. And there was also a cash flow spreadsheet that had been kept for many years by a retired auditor, Controller Weir. And that was information that he worked with our actuarial, Keenan and Associates. So that information was provided to the actuarial on, well, we were hoping for monthly basis, but it didn't always happen on a monthly basis. So as he, at the retirement of our auditor, Controller Weir, the cash flow spreadsheet wasn't being kept up. So Keenan took on that task to work on the cash flow spreadsheet that had been created in the past. So human benefits staff provided Munis reports of year-to-dates to the actuarial, so he could keep track of cash flow. And then based on the claims, the cash flow, that's how we would determine what we should be budgeting for the upcoming fiscal years, and also the percentages of increases. So when we budget for claims, we would budget potentially, this last year we budgeted a 12% increase on our claims. That I'm not talking about premiums to county or employees. I'm talking about how do we budget for the 22-23. So we would determine basically on the use and what we would need to actually present a budget for the following year.
Supervisor Jurdy.
Yeah, my understanding is that there was also a communication between Keenan, who was managing the plan, and with former auditor Lloyd Weir. Is there any information that could be historically going back and forth between the outside health consultant and the auditor's office that should maybe simultaneously be transmitted to the healthcare team within HR or the executive office, so that there's no lag time in that information being transmitted to everybody who has a hands on this budget?
Yeah, I would agree with that. I believe that was happening when we were working with retired auditor Controller Weir. So he did meet with us frequently with our actuarials and the information. So they did work together.
Supervisor Haschek.
So when we go back to that ACFR from 2021, and it was just closed out in June or July, and so it seems like we should have the information for the INBR for that previous year. Is there any indication that we're way out of whack from the 3.6 that we're looking at? Or, we had the 1.1 and then the 2.5, and then we're saying that we don't even know if that's correct.
Yeah, Sarah, Acting Deputy CEO Sarah Pierce, so you're on. I believe we have a worksheet that calculates where we're at. I don't know if you need a quick minute to make an adjustment to that, but we have the projection of the health plan deficit roughly at $6 million, I believe.
Sarah Pierce, Acting Deputy CEO. If you give me a minute, I need to pull it up and I can share it.
And
Can
No,
I
go
add?
ahead.
Yeah. If I could add to Ms. Coveson's statement, it's what's in Munis as well as the balance sheet. And I think we've learned recently that the balance sheet is only produced once per year. So finding out where we're at any given moment might be difficult. Because we asked for a balance sheet, I believe it was just about a year ago, to be able to apply for a USDA grant. And that wasn't something that we could do, and I don't believe it's something that you're able to run out of Munis, if I understood a conversation we had in the ad hoc from Ms. Coveson.
so if we have this balance sheet that's kind of the cost, the expenses that we're incurring off the books, off Munis, then I guess my question to Ms. Coveson is there a way of sharing that balance sheet with the executive office so that we're all better informed?
It's not that the information is not in munis. It's that staff needs to understand how the revenue and expenditures throughout the year, when they net together, would impact the balance sheet. So staff needs to understand a little bit better how the balance sheet and the revenue and expenses work together in order to come up with what a projection is throughout the year if you want to make a projection. And it isn't that information is not in munis. It's that there is an entry that's made at the end of the year based on what the actuarial has determined the IBNR is. And it's an adjustment based on what the previous IBNR and the current IBNR to the financial system. So it's not that information is being stored elsewhere. And unfortunately, I was provided no information about what the discussion topics would be today. Clearly, the executive office staff knew exactly what would be discussed today. So I'm not at liberty to just start pushing buttons and pull stuff up and tell you exactly what numbers are when I was not given any indication as to what you all wanted to discuss today. So I'm not saying that information can't be provided. It can be provided. I am confident that staff has access to the balance sheet because staff's name is on the balance sheet, the report that was produced for that meeting. So I know staff has access to it. Staff may not know how to run it again or where it's located, but they have the permissions to access it. The auditor's office may have brought information to that meeting that we had, but the report that was used for discussion purposes was produced by CEO's office staff directly out of munis. So maybe they don't remember where to go or how to read it. That can be achieved by having another discussion offline with staff to understand how those items flow together. I'm confident we can come up with a number, but I can't put it at a fingertip at this moment. I would be remiss to say something off the top of my head. I don't recall exactly what the changes are right now.
So I appreciate that. There is a problem with process and communication here. This was the auditor controller's item. We didn't get an agenda summary. The ad hoc tried to meet, our board asked us to meet, 8 days notice. I got an email back from you, couldn't do it. So I'm all for taking items offline, but offline hasn't been working for us. I'm going to propose as a constructive idea, let's do this. Let's do a screen share, full board, auditor, controller, executive office. Let's work through the report together in front of public eye and get to the bottom of it. But because what we can't have is going offline and another month goes by and no report. And I don't want to get into blame and who generated a report and who didn't before. I don't care. This board needs to know the numbers. We need to know what to work with to make decisions. And if we have to sit down and do it together, so be it. Supervisor Mulhern.
Thank you, Mr. Chair. I actually wanted to briefly suggest that since item 4C, the PRISM health insurance item has been moved to a future meeting, that will give auditor, controller, tax collector Cubison and the executive office staff and our benefits staff time to meet and get a report together, and also to get information from the actuarial. And in my opinion, and Council Curtis might kick me, my opinion, that could and should be included in the board's discussion about moving to PRISM, because I think it is going to be really part of what the board needs to weigh, and is a more appropriate time to have this discussion, not at the ACFR conversation.
Can you reiterate that for the clerk to capture as direction?
Direction is staff to bring back a current health insurance deficit information with the PRISM healthcare item.
And by staff, is that both the executive office and the auditor's office?
And yes, it is.
Does the board support?
Yes.
Yeah, I see a majority.
Yeah. And I think we ought to include the consultant too, the health consultant. And if we're looking at direction to staff and everyone, I think we need to get this whole reporting issue cleared up. And so I would direct staff to work with Ms. Covison to figure out how do we get those reports that we really need.
I think we've directed that in the past, though. The problem is it hasn't been forthcoming.
Well, it seems like it should be something that, you know, within a meeting or something with a couple days preparation, we should be able to work on it and have it done. So I would say have a report back to the board by next week.
CEO Antle, can you do that? Because the ad hoc's been working with your office, and so far we've been unable.
Darcy Antle, CEO. I would just I'm trying to remember all the items that we went through last meeting, and I believe there was a meeting that was to be set up with the ad hoc and the fiscal team, executive office, and Ms. Covison to work through the reports that you're desiring. And so then we would have a list of all those reports. We can attempt to get that done by the 4th, but I'm not sure of, you know, everybody's time strengths. But I believe that was one of the takeaways from last meeting in that other item.
Well, the one report we need is that INBR update the balance sheet.
Oh, certainly, we can work on that one by then. Yeah, I didn't know if you were talking the laundry list of reports. So
No, I'm just talking that's the healthcare plan.
I would support that.
Okay, I guess my question for Ms. Covison, is that something that you could work with staff on?
Yes.
Okay,
Yes.
thank you.
Supervisor McGordy?
Well, it seems to be a weak link in knowledge and education in our system of handling munis, generating reports, having all the information we need in a place where it's accessible. And you know, as a board, we need to recognize this and prioritize it as something to fix, because this is really holding us back. We can't negotiate with labor. We get bad surprises. In terms of where we are financially with the healthcare plan, we need to be more on top of it.
CEO Antle, is there a reason we can't just pull up Munis on a screen share and work through it here live?
not to my knowledge. I don't, if I have access to run it or acting deputy CEO has access to run it, we would just need that clarification from Ms. Covison. But I'm sure Sarah can pull up her screen very quickly and we can walk through and show you. I mean, you already saw a screenshot of what we're seeing. And clearly, Ms. Covison says we're not running the correct report. So if she can point us to the correct report, then I think we could get there within minutes. I don't know why.
Given that it's only noon, is it possible for you to work with the auditor controller to get the name of the report, have one of your staff members run it, and report back later today before we leave?
Certainly, yeah.
Okay. County Council, do we need to table this item if we're going to report back?
I believe that would be the appropriate procedure.
Okay. Is there support from the board?
Chair Williams, could you please determine if you're done with CLA?
I think we are. We're going to go to public comment and then look for a motion from the board, and then we should be done.
Go back to a prior item that you had asked for.
Your choice.
Submit as written,
Okay.
and then we.
Are we ready to go back to the health plan report, CEO Antle?
Yes, Atlas, we would need Sherry Johnson, Deputy CEO, and Acting Deputy CEO, Sarah Pierce. And perhaps Tim Holman, Acting Deputy. No Sarah, no Tim? Oh, you got Sherry, okay.
Sarah Pierce, Acting Deputy CEO, I am on.
All right, this is back to item 4A tabled earlier. We were hoping to get a report of the health plan deficit.
Good afternoon, Board. Supervisor CEO Antle, Sarah Pierce, Acting Deputy CEO. I'll go ahead and share my screen right now. We were able to meet with the Auditor Controller to identify what report can be used to project the fund balance deficit, the health fund deficit. So hold on one moment. You see the PDF?
Yeah, if possible, maybe you could zoom a little. We can see it.
So what we were able to identify with the auditor to controller is there is an account summary trial balance report. And this is as of the end of June 2022, but it is still preliminary as the year-end audit entries have not been entered. So what we have identified is if we add up the retained earnings, the revenue and expenditure, we should get an idea of where the health plan fund balance should end. So down below, we've recapped, here's the retained earnings, which is a deficit, the projected 21-22 projected revenues, 21-22 projected expenses. We've also added in, which is not shown here, what the budgeted deficit was for the health plan for fiscal year 22-23, and then have offset the allocated ARPA funding that was allocated on June 21st at budget hearings to come up with a total projected deficit as of the end of fiscal year 22-23 of 5.6 million, almost 5.7 million.
Not seeing any other hands, I will ask a question. If we hadn't contributed 4.6 from ARPA, where would we be? Would it be about 10.2 million deficit?
That's correct.
So that's really notable that we've generated a $10 million deficit in our self-funded health plan. And do we think that trend will continue at the current rate?
I will defer to Deputy CEO Sherry Johnson or Darcy Antle.
Yeah, Deputy CEO Sherry Johnson. In the current status that we are seeing, the claims come in and the high costs of healthcare, I would say yes, that it seems to be trending in this direction.
So, and that was over what period of time the deficit was created?
Acting Deputy CEO Sarah Pierce, over the last about 2.5 years. Sherry, if you want to.
Yeah, sorry, Deputy CEO Sherry John, that is correct. Now, please note that the 4.5 million is for the 22-23 budgeted deficit. So that's for the current fiscal year that we're in right now. That's what we budgeted for projections.
Supervisor McCourty.
So how does something like that happen with nobody noticing? I mean, I'm having a hard time getting my head around this because, I mean, you must be getting bills fairly frequently about expenditures of the healthcare plan. How does this go on and on with it turning into a situation where it's a disaster?
Darcy Antle, CEO. There has been a period of time where prior boards did not increase premiums to the employee or to the county, and that reduced any reserve that we have. Also, there was 2 years of the health holiday. Sherry will have to confirm those years for me, but that took away from any reserve that we had. And about that time, as revenues are going down, we were burning up our reserve, but not building our premiums and continuing to carry the cost of health care. And healthcare has gone up enormously, particularly in the last 3 years during COVID.
What is kind of your standard procedure for tracking expenses in the healthcare plan? Does somebody look at it monthly, or do they wait quarterly, annually? What happens? Because I mean, that's extraordinary.
Deputy CEO Sherry Johnson, we do monitor it monthly, and we were aware of the $3.6 million deficit at the end of 21-22. So that information had been brought forward. It was the information that we had received with the actuarial received when we were budgeting for the next fiscal year, when we had received the $1.1 million as the deficit. So that's why we needed the clarification of the $2.5 million in the INBR.
Supervisor Jordy.
Yeah, so I'm very concerned about the cost of having this independent plan, and I hope that proposal to contract with a pooled plan of other public agencies comes back to our agenda as soon as possible.
Supervisor Haschek?
So just to be really clear on all of this, so with the deficit was from the 2021 fiscal year, and that was the 1.1 plus the 2.5 million, so is the 3.6. And then for 21-22, it looks like we have a $2.1 million deficit. And then for 22-23, it's a 4.5 kind of projected deficit. And that's how we got 10.2 overall. And we're paying it off with the 4.6 million from the ARPA. And so I guess, that's the basics of the numbers, right? And so, with this information that was not being available to the CEO's office or the auditor, now it sounds like we have a way of tracking this, and that the communication is better between the auditor's office and the CEO's office. And so the board can keep more informed because we know where to find these numbers. Is that true?
Yes, go ahead, Sarah.
Sarah Pierce, Acting WCEO. Yes, that is correct. We can run this report, and it is at a point in time, but only some of these numbers are only updated once a year. So it will still need to be worked out closely with the Auditor Controller's Office during year end to fully understand where we're at.
But so these are the numbers for our self-insured health plan. But if we went to another plan, the prison plan, then we would have a clearer idea where we are at all times.
This is Sarah Pierce, Acting Deputy CEO. Yes, for the revenue and expenses, we will. Some of these other items, such as the accounts receivable, the accrued payroll, and this cash and bank, we may need to work with the Auditor Controller's Office to understand if they change.
Okay, very good. Thank you.
Supervisor McGorty?
Well, I totally support moving away from self-insured plans. I was on the board at Ukiah Unified when we did the same thing because, again, we couldn't control costs. And all it takes is 5 very sick people, and suddenly we'd burn through $10 million without too much trouble. So I fully support us moving to something that is, more predictable for us. And I also think we need to update more than once a year. We need to be tracking this on a monthly basis practically so that we don't get bad surprises like this because it affects everything we do. We're trying to negotiate a COLA. If we don't know what we owe, how are we supposed to do that? I mean, we've had that discussion today, and this just reinforces it. And I think part of it is finding an effective way to know where we stand at all times, as much as possible. And I realize some of these things are difficult because of our accrual accounting systems, but nonetheless, it's not nice to sit up here as a supervisor and discover, hey, guess what? You owe $5 million, and you didn't even know about it. So that makes it very, very difficult for our entire organization, and I hope we can find ways of putting controls in place to stop that from happening in the future.
Supervisor Jurdy?
Yeah, I'm looking forward to the pooled plan, healthcare plan coming back to the board as soon as possible. And I'm also hoping that we could maybe give direction for the budget ad hoc committee to meet with the executive office to look at the option, if we have an option of using any additional ARPA funds to pay down any of the additional unfunded, or I guess the debt in the healthcare plan.
Is there support?
Well, I would like to see it come back to the full board for discussion.
That's the intent, but for the ad hoc to at least look at it and discuss it with the CEO's office and the fiscal team.
Yeah, I would support that, and then bring it back to the full board for consideration. We just kind of gather the information and then have a discussion as a group.
Okay, and I support it. There's a majority. Clerk, were you able to capture?
Yeah, I have to direct the budget ad hoc to work with the EO fiscal team to look at the option of using any available ARPA funds to pay down additional debt in the healthcare plan and return back to the full board with information.
Yep, that works. So I have a few questions. It looks like we're running about 4 million per year average deficit on the health plan. So that $10.2 million, it's not like a credit card where we owe it. We've already paid it. What did we pay it out of for it to be a deficit? What $10.2 million did we use to pay for the expenses that we're showing as a negative 10.2?
This is Acting Deputy CEO Sarah Pierce. I believe we would need to have the Auditor Controller on to confirm.
Is she available? I would think we would be short 10.2 somewhere else. Supervisor Haschak, do you have the answer?
It seems like we're paying 4.6 from the ARPA money.
Right. Yeah. Okay.
Right.
So the remaining 5.6. Where did we take that from? There should be another account that's low 5.6 because we borrowed funds to pay health insurance claims. CEO Antle?
Acting Deputy CEO Sarah Pierce is correct. We would want confirmation from Auditor Controller Ms. Covison, but my understanding is that was borrowed from the Treasury and that the health plan is paying interest against that, that balance.
So I don't know that the board ever authorized that. What interest rate are we paying? Is that what we mean to do? And I hear some voices say we don't have a financial problem, our county finances are healthy. If that's the case, I would like to pay off that deficit, that $5.6 million. Let's pay it off with general fund right away if we have the revenue. Do we have the revenue?
Darcy Antle, CEO. Sarah, do you have the interest rate?
Acting Deputy CEO Sarah Pierce. One moment, I'm looking it up.
Supervisor Jurdy, do you have a clarifying question?
Yeah. So hypothetically, if 5 million of the $10 million healthcare deficit is attributable to employees who are funded principally with state and federal dollars, and we've tossed out the figure 90%, 95% state and federal dollars, would there be a way of going back to those grant programs and those state programs and try to refund, pay off that debt using state and federal funds?
Darcy Antle, CEO, through the chair, if I may, Tim Holman clicked in, and I believe Tim has had the conversation with social services, fiscal, and I believe to go back retro is not an option.
CEO Antle, could you clarify, if we would have billed at the time, would we have collected it?
I believe that's correct.
So we gave the state free health insurance for their program because we didn't have regular reporting to catch the increase. Accurate?
I can't deny that.
Supervisor Haschak?
So if we have this debt that's out there, the 5.6 million, and we borrowed it from the treasurer's office, we didn't approve it. Did we have to approve it?
County Counsel?
I don't know that I could answer that off the top of my head. There are some provisions that allow auditors in certain cases to essentially borrow from one fund for another. Some of those may require board authorization. Some of them might be authorized by statute. I would have to review and look more closely.
Year after year, or just on a short-term basis?
I believe typically on a short-term basis.
So we're talking about year after year. This is 2.5 years in. Can we direct County Counsel to tell us whether this was proper at a future meeting?
I support that.
Looks like support. And then Supervisor Mulhern.
Thank you. I'm looking forward to having the PRISM healthcare discussion. I do think that I would like for the fiscal team to put together an attachment to the agenda item that explains where we are now with our current plan, where we might end up in some of this history. I think it should be attached to the agenda item because it's important for the board to consider as they're talking about possibly moving in a different direction.
I support that. John?
So with this debt, and we're paying interest on it, do we know what interest we're paying?
That's, I believe, yeah, Sarah's got her hand up. Sarah Pierce, acting.
Sarah Pierce, acting deputy CEO. So the interest rate on the last quarter that was charged was 1.27%, which has totaled about $41,000 for the fiscal year 21-22.
And who is that money borrowed from? Like we hear the treasurer's office, but like where's it coming from? We're all the county.
Yeah, again, that would be a question for Auditor Controller Shamise Cubisons, but there is a treasury that the treasurer tax collector position manages, that when all the funds come in for property tax or schools and those things go into this, I'll call it account, the treasury, and then that is managed by the treasurer tax collector and the auditor controller.
Yeah, that's the pool of money, right?
CEO Antle, I have just a few more questions. Does former auditor Lloyd Weir still work for the county in any manner? Extra help?
I believe so, as extra help.
Could the board,
Yes.
given that he works for us and a lot of these were his decisions, would it be possible to invite him into our meeting so that we could ask what happened with the healthcare plan? How funds were transferred, was approval required, was it given, so forth?
Mr. Chair, are you asking about right now?
Well, no, maybe at a future meeting, next meeting.
Yeah, and I would say you have the ability, even if someone is not an employee,
Yeah,
to both to invite them and frankly, even to subpoena.
I think it would be helpful to invite former auditor Lloyd Weir to get to the bottom of what transpired to get us to this position. Maybe it'll help us get out of this position. I didn't get an answer to, can we pay off this deficit with our general fund today? Right, we want to finance capital projects that have a long life. This is a health plan that's already been provided to our employees. It's an operating expense. Shouldn't we pay it off with general fund?
Darcy Antle, CEO, in order to be able to do that, you would want to know what your carry forward is from prior year, if there's any increase in revenues, and or you could use your general fund reserve, but I think you have to do that at time of budget. And so that would be in June.
Mr. Chair, just per the budget statutes, you need to either, for a general reserve, it either has to be used for an emergency during a declared state of emergency for the purposes related to that emergency, or it would have to be done during the budget cycle in June.
If we don't have adequate revenue say in the carry forward to pay off our healthcare deficit, how do we have healthy finances? Aren't we spending more than we're bringing in? Without a COLA, without any other spending, just where we're at today, are we spending more or accruing more expenses than we have revenue?
Darcy Antle, CEO, yes, we have a structural imbalance in our budget, as mentioned prior, and we're trying to work through those issues with this board.
My last question, are there any other instances where we have this fact pattern playing out? We've learned about the health care deficit. It was a surprise to me. I think it was a surprise to the whole board. Will we be surprised by any other accumulating deficits?
As you saw earlier today, I think you realized that we were alarmed by the disaster recovery. I do believe that money is coming in, and I know we got another notice today that more money would be coming in, but that is a great concern for us, where the disaster recovery account is at this time and the delays from FEMA on our financials, yes.
And did we borrow that money, say from the Treasury, paying interest while we're waiting for FEMA to potentially reimburse us?
Sarah, can you tell me if we're paying interest on the DR account, why this, over this last year?
Acting Deputy CEO Sarah Pierce, it is the same. We are borrowing money, but we are not being charged interest due to the way that the Disaster Recovery Fund is set up and the intentions of the Disaster Recovery Fund.
Thank you, CEO Antle. And I want to recognize we do performance reviews in private, but in public, I don't usually get a chance to talk about how great it's been to work with you. I feel like you're really pulling the Band-Aids off, getting to the heart of the matter, and although it's a huge mess, I think this county is making substantial progress, so I thank you.
Well, Mr. Chair, I'll echo that and also add on to it. I think this board is prepared to face some unpleasant things that maybe previous boards didn't want to do. So I think that in totality, we'd like to leave Mendocino County in good condition financially when our terms are up.